Let's talk about that trend, why you believe the broader trend still holds and we're heading towards lower interest rates.
Yeah, well, I think if we just take a step back from, we obviously had a very big election event more recently, but if we just take a step back from that, and just take a look at where we've been over the last 4 years, we've been in a very unique period for global economies. The pandemic itself, the fiscal policies that supported it, the recovery from that, and we're actually getting back to normal. And you can see that if you look at overall inflation trends in the U.S. We are still a little bit elevated on inflation, but we're in a stone's throw. Other economies, by the way, are much closer to normal in terms of inflation. And if you look at the labor market, it's also normalized quite a bit from those more acute labor shortages. We've had the unemployment rate up. So against that backdrop, central banks should also be moving towards some semblance of normal. And we think they have a lot of room here to continue to gradually reduce interest rates across a range of economic scenarios. So, although uncertainty, political uncertainty could slow that pace down, we think ultimately still there's a gradual pace down, and we view at least the prospect of hikes to still be relatively unlikely.
Well, let's park the hikes just for a moment. You said there's still a lot of room. So underpinning that statement, I assume that means neutral is a whole lot lower than where we are. Tiffany, how much lower do you think it is?
Well, we've argued that, neutral on a real basis is probably around 1%. Around the developed markets, kind of a 0 to 1% range seems very reasonable to us. If you think about that in nominal terms, so adding inflation, if inflation's kind of 2 to 2.5, that suggests a 3 to 3.5% neutral nominal interest rate. And we think that's basically where they're going. And so that within that context, again, it seems like a gradual path lower is still very reasonable. Having said that, though, we do think they probably will adjust their forecast for 2025 somewhat higher. We're looking for 3.8 from them, and that's just because the economy's been doing well. So when the economy's strong, you don't have to lower interest rates as fast, but nevertheless, they want to make sure to stick that soft landing, and they don't want to overdo it. So again, that kind of gradual path lower still makes sense to us.